All right. Morning, folks. Hope y'all are doing well. Couple minutes late here, but let's go on ahead. Let's jump in. Hope you had a good weekend. Let's kick some ass and take some names this week. So there's a couple of things I want to cover, and then we'll jump into whatever you good people got on your watch list. But the first thing I want to start with, and this is pretty nasty. This is nasty stuff. Might not even be safe for work. Kind of nasty. Check out Goldman Sachs here. So, big move on Friday, but in terms of the structure that led towards Friday's move, weekly squeeze, 3-day squeeze, you had where the hell are we going? You had a daily squeeze. Now, keep in mind, none of these were extended. So they're not just squeezes, they're squeezes at the buy zone. So there was a weekly squeeze, there was a 3-day time frame squeeze, there was a daily squeeze, and now check out the lower time frames. There was a 4-hour, there was a 2-hour squeeze, there was a 1-hour. Are y'all getting the point? Right? There was a 30-minute squeeze, there was a 15-minute, I believe. We even had a 5-minute squeeze. So, whole point being here is that when you have a stock in a clear uptrend, like a Goldman Sachs, and you have a bullish structure with squeezes and positive histograms and stacked DMAs, and you got all that good stuff lining up here, there's such a growing probability of a pretty explosive move. So, we did take a position in that on Thursday, and we're getting out on Friday. I think on Friday, the stock was up about 4%. So we caught the move we're looking for in a couple of days here. But if you look at the financials, a lot of times, you find that structure in the individual stock. A lot of that has to do with the structure of the sector that it belongs to. So if we look at the financials here, which of course Goldman makes its home in, beautiful weekly squeeze, beautiful 3-day squeeze, daily squeeze. There was a 4-hour here, there was a 2-hour, there was a 1-hour. One of my favorite swing trading setups. A stock in an uptrend is squeezing all over the place, and the sector that it belongs to is squeezing away as well. So along the same lines here, first and foremost, on financials, I think a great structure. So weekly squeeze here, I think, has all the potential in the world to bring it back towards those highs as we're up here. Kind of smooching towards +2. I'd wait for a bit of a dip, and then obviously on something like a Goldman, I'll take that trade all day long at the 21. But at this point, I'm going to wait for a bit of a dip. So we're waiting on dips here for the financials. But if you take a look at, say, the semiconductors, here's a beautiful weekly squeeze. You got a 3-day squeeze that's already firing it's a daily squeeze. You got a daily squeeze that's already firing to the upside, and you got a 3-day squeeze gearing up here. So, there's that triple squeeze in the semiconductors. So my first thought is, does anything in the basket have the same structure? Here's a nice looking chart in, say, a Broadcom. Bullish daily squeeze, bullish 3-day squeeze, and a bullish weekly. So I think in terms of what we saw out of the financials and potentially what we continue to see out of the financials from that same kind of perspective, I think you got the same potential here with the semiconductors. So same thing. You're a little bit extended here on your daily chart, but the weekly squeeze has the potential to create momentum into September, October, so to say. So I think for both the financials and the semiconductors, because of that triple squeeze effect, wait for a dip to maybe the 8 EMA, maybe the 21. But those are two groups I'm waiting for a pullback in. Financials and the semiconductors here. Now, as far as the industrials, XLI, same thing going here. Bullish weekly squeeze, you got stacked EMAs, green 10X bars. Crank it down to a 3-day. Got a great looking 3-day squeeze. And then on a daily time frame, you got a squeeze here as well. So a similar structure, kind of the same structure that's pushing the financials higher here. A similar structure to the one that has led the semiconductors higher here. So for the industrials, the nice thing here is we're not extended. You don't have to wait on a pullback. So I love the structure of the group. I got some September expiration in the money calls here. And then I think in terms of what looks good in the industrials, actually not too much, to be honest with you. Caterpillar is pretty busted here. So the group looks good. Caterpillar really doesn't, to me. UMP, I think, is way too neutral. No stacked EMAs, so it's not clean enough for me to want to trade it. And then 3M here isn't clean enough for me to want to trade it as well. So what does look good within the industrials is HON here, Honeywell. Let's take a look. So you do have a weekly squeeze, a really bullish one too. So you got a bullish weekly squeeze here, very much like XLI. You've got a very bullish 3-day squeeze, very much like XLI. And you got a good looking daily squeeze here, just like XLI. So it's kind of that same thought process. Goldman Sachs makes a huge push here and potentially continues the push because, yes, it had a good structure on its own with a weekly, a 3-day, a daily, a 4-hour, all the way down to a 5-minute. We had squeezes. The group it belongs to had a similar structure. I think you can look to take a trade on just the industrial ETF itself, or you keep an eye on Honeywell here. And then in terms of technology, right? So we got two sectors I think we wait for a pullback on. The chip makers, SMH, and the financials. Great looking charts, just not the best entry at these extensions. If you got a swing position in, say, a Goldman or a Broadcom like I do, I think you're in the right spot. But as far as coming in here and pumping in new capital, let's wait for a bit of a dip. So wait for a dip there. You can look for an entry here in the industrials. You got the structure. And then as far as technology goes, you do have a bullish daily squeeze here. You got stacked EMAs. Your histogram is positive. Never closing under the 21. So a good structure. Under the thought process here that potentially this daily squeeze fires long and gives us a good, say, week or 2 weeks into momentum, into August monthly expiration. I don't really like Amazon here. That's kind of a sloppy structure. Google, I think you're looking for the lower time frames. So you do have a bullish daily chart. You are a little bit extended. So you're up here at plus 2 ATR. So you got to take that into consideration. But you got green 10x bars, you got stacked EMAs. Google's probably going to follow the Qs if the Qs do push higher. So again, for conversation's sake, if the Qs do push higher, what are we looking for here from Google? Well, if we can't take our favorite entry off that 21 EMA, the 8 EMA here is the next best thing going. But what we would want to see here is what do we got for squeezage? So you do have a 4-hour squeeze here. And again, the thought process is that 8 EMA. If you're going to make a next push higher, from this level, that's your trampoline. That's your launching pad. So squeezes on top of that, they can be pretty powerful. Here's a good looking 2-hour. Yeah, see, this is what you're looking for. This is what you're looking for. You got a 4-hour, a 2-hour, a 1-hour, a 30-minute. So as this daily trend continues, you make these big pushes off the 21, you kind of come back to the 8, you catch your breath. That's what you're looking for. That 4-hour, that 2-hour, that 1-hour squeeze, if they fire long, that could be that push back into the highs there. So from that perspective of lower time frame squeezes giving you the push you need for pushing to the highs, I like Google there. And I really like Apple. Really good looking daily squeeze. So you got your support here at the 21. You got all the good stuff up here. Stacked EMAs, green 10x bars. So you got a daily squeeze. You've got a 4-hour. You got a 2-hour. You got a 1-hour. So I think kind of the same thing here. QQQ fires that daily squeeze to the upside. Pretty damn good probability Apple's going to chug right along with it. And that's what I like in technology. I mean, Facebook looks good. There's no daily squeeze here. And with Microsoft, it's pretty much the same discussion that we just had on Google. I like my dip to the 21, but if we're just going to sit here at the 8, there might be a 4-hour there might be a 2-hour, there might be a 1-hour, there might be a 30-minute, might be a whole crap load of squeezes under the surface, ready to get it popping there. So in terms of potential opportunity, that's my focus right now. Love the semiconductors here. Love that weekly squeeze. I think with that weekly squeeze intact, you're poised for momentum into September, if not October. But I would wait for a dip here. Same thoughts of the financials. Great looking weekly chart. Give me a bit of a dip. Not waiting for a dip on the industrials because we don't have to. So like I mentioned, I got some Delta 70 in the money calls. I got 100 strike calls that expire in September. And all I'm asking here, a little push back into new highs. Not asking too much. So I like the industrials. And then in the options room, we do have a PCS, put credit spread on Apple. Looking for a bit of a push here. So those are a few places I'm looking for opportunity within. In terms of that whole triple squeeze, multi-squeeze, you do got a few here. So we'll go through those real quick. Tesla. So I do have a position here in Tesla. You got a weekly squeeze, and your histogram is not quite positive. There's your stacked EMAs and your green 10X bars. So you got some good structure, some good momentum. You've also got a 3-day squeeze, which looks pretty solid. And you got a daily squeeze that has currently fired to the upside. And you're holding up here your AEMA. So if we go lower time frame squeeze hunting, nothing on that 4. There you have it. There's a 2-hour. There's a 1-hour. So I do like the structure here of Tesla for, really, can we just get this thing back into trend? Sort of the way I'm looking at it. Good looking weekly squeeze, good looking 3-day. Daily is firing off here. Could we finally get back into a bit of a trend? And we got put credit spreads down yonder with short strikes at 640. So, would hate to think that Tesla is such a dud ski here that it comes back under the 21, under the 50, and just, defecates to that extent. But I like the weekly squeeze. So we got positions that expire there in September. And you got a bunch of different squeezes. I like that. Next one up here is Tractor Supply Company. So maybe not the sexiest stock, but you got to get your alpaca food somewhere. But a great structure, a good looking uptrend. Beautiful uptrend. Weekly squeeze. Inside of the weekly squeeze, there is a 3-day. Inside of the 3-day, there is a daily. So big fan of that there. And then Comcast. And what I like about Comcast is you're in the communication sector here. So XLC is a communication sector. What the hell? That's a 2-hour. Okay. There we go. Beautiful uptrend. Beautiful uptrend here in the communication sector. So no weekly squeeze, but a great looking trend. There is a daily squeeze here. So in terms of different holdings of that basket, Comcast is actually pretty solid here. So again, not your household name, so to say. Probably one of the better looking weekly squeezes I've seen right now. So histogram's positive, bullish momentum intact, and inside of that weekly, there's your very bullish 3-day squeeze. Inside of that bad boy, here is your daily. Let's crank it down. There's a 4-hour. There's a 2-hour squeeze. So good stuff there. So Tractor Supply Company, Comcast, Tesla. What else we got on here? What else we got on this watch list? Let me find my daily squeezes here. There you have it. So we'll go through a few of these here real quick. We covered Apple. Really anything in the semiconductors I like. I'll tell you one that is interesting here is Zoom. So Zoom has a very nice weekly squeeze setting on up. You got earnings at the end of the month here. Good looking weekly. No 3-day squeeze. But a good looking daily here. So we did buy the dip BTFD. We did some BTFD in on Friday as we pulled back towards the 21 and the AEMA here. You didn't lose your structure. So, I mean, it was down a good 4% or so, but it's just a nice little healthy dip. A positive histogram. So I do think Zoom has a good structure here for not just potentially the push into earnings, but check this out. In terms of trying to get, the very early days or the early stages of a potential shift in trend, let's study the weekly chart here for a second. Got your uptrend going, so everything is good, but then you lose momentum. So you're losing momentum here on your histogram, and at the same time you're losing structure. You're under the AEMA, you're under the 21, then the histogram goes negative for a bit. And it's pretty ugly stuff here for Zoom, but if you study the last month and a half here, we're back above the 21, continues to hold the support. Histogram has made the full rotation back towards positive, and you got stacked EMAs here. So not only do I think with that daily squeeze, is there the potential for a push into the earnings announcement at the end of the month? I think thinking out into September, October, really the rest of this calendar year, the weekly squeeze fires long. I think it's poised to kind of kickstart the trend here for Zoom. I look at Tesla really from the same perspective. Early stages, but maybe that thing getting back into a trend. Peloton, I look at that weekly chart just the same. Great uptrend, but you lose structure, you lose momentum, you break down, and slowly but surely trying to turn the corner there. So bought the dip on Zoom. I think a good looking daily squeeze here is Crowd. If I don't say so myself. So good looking daily squeeze here for Crowd. Shopify continues to be a good looking daily squeeze. It's not my favorite thing to trade because the spreads are just kind of rubbish, but the setup is beautiful. And then I think DocuSign here looks pretty damn bullish. Your weekly chart, just strong. It's my professional opinion, strong. But your daily chart here, stacked EMAs, you got green 10x bars, and we're at the buy zone, but we don't have a daily squeeze. So simple fix there. All we got to do is crack it down. And there's your 4-hour squeeze. There is your, you got a 4-hour. So I love the setup a lot here. Now, I would like a little bit of a dip, just a little bit back down towards the 21. But I think your uptrend and your bullish momentum is just completely intact here. Looks rock solid. And you are near your buy zone with a big whopping 4-hour squeeze. So I think you got a good looking chart there in Docu. I would like to take an entry here this week. And then really, gang, it's about it. Let's take a look here at the futures. The Qs, flat is a board. S&P 500 flat. The Dow is flat, and the small caps flat here this morning as well. But as a quick recap, I like the weekly, the 3-day, the daily squeeze here on the industrials, and my thought process is, as long as you got a good-looking weekly chart here, I think you got the potential for a push into the highs come September, October, maybe sooner. So I like that there. For technology, we got the daily squeeze. So therefore, if that fires long, you're looking for your Googles, your Amazons, your Apples, etc., to make a push to the upside. So I think you got a good structure there with the Apple's daily squeeze. Just a matter where the Qs go. But everything's lined up here for Apple to make another good push. So the ball is in the court of the QQQ right now. And then Google, you got your 4-hour, your 2-hour, your 1-hour, your 30-minute, your 2-minute squeezes. And then I'm waiting for a dip here in the semiconductors. I'm waiting for a dip here in the financials. And then as far as open positions goes, in the money calls on the industrials that expire in September, put credit spreads in the options room on Apple here that expire next Friday. Expires next Friday. We got a couple of different put credit spreads here on Broadcom, put credit spreads here on Crowd. What the heck else we got? We got rid of Goldman. We got put credit spreads on Zoom, playing that daily squeeze. Call credit spreads on IWM, and a put credit spread here on Peloton. So out of the 6 or so open positions, it's the only one being a bit of a pain in the ass here. So at this point, I mean, it's a good-looking weekly chart. Good-looking weekly chart. But at this point here, looking for a bounce back towards that 50, towards that 21 this week. I'm going to keep a tight leash around the bicycle's neck there. But everything else is looking pretty solid. And then we got some positions here in Tesla as well. So that's what I got for y'all. Real quick here, one common question I'm getting on, whether it be Instagram, Twitter, YouTube, is, just call it this fear, so to say, that, the market's going to pull back here any day now. So yeah, from a weekly charts perspective, you are a bit extended here. So sure, anytime you're up here at 2-3 plus ATR, there is the potential for a pullback. Now, I think one healthy perspective here is that we could pull back all the way to the weekly 21. And mind you, the S&P 500 hasn't touched the weekly 21 since October of last year. So it's been a while, right? But we could pull back all the way to the weekly 21, and everyone's going to get bearish. Everyone's going to kind of lose their shit, so to say. It's just a healthy pullback. Just a healthy pullback. So the quote-unquote pullback that so many folks might be fearful of here, on a daily charts perspective, I'll give it to you, going to look pretty harsh. From a weekly charts perspective, I'd be looking to buy the heck out of that dip. You kidding me? All day long. So, there's a little bit of context, in terms of, sure, we could pull back and it doesn't really change the uptrend here. It doesn't really change the bullish structure of the market on a weekly chart. But then the other way I think I have to look at it is, whatever happens tomorrow happens tomorrow. Whatever happens next week happens next week. In this present moment, which as a trader, it's really all we can make decisions based on. In this present moment, what am I looking at? Like, what's right in front of me here for the S&P 500? Well, from my perspective, it's a good-looking daily squeeze. There's nothing wrong with this. It's a daily squeeze with a positive histogram. It's stacked DMAs. It all checks out for now. Now, maybe tomorrow morning it doesn't check out, but for now, that looks bullish. I look at the Qs here. Sure. Could we pull back all the way to the 21? Yeah. But I look at that daily chart. It's a pretty bullish looking daily squeeze. So, I think the major thing is you take what the market has to offer and you just position size appropriately. Sure. As we're up here at 2 to 3 ATR on a weekly chart, do I want to be taking 20% positions left and right? Well, definitely not. Maybe back here. Maybe when the weekly chart is coming off that 21. And the whole thing is, and this is the whole thing about trading. You can read books, you can join classes, you can join masteries. One thing you can't purchase, though, is the time under your belt and the experience. One huge component of swing trading is that by the time we get here, and what I mean by here is by the time we get to this point where there's fear of a pullback, which, it's funny. What the hell's wrong with a pullback? That pullback here was a total gift. If you're a swing trader and you didn't take advantage of that clean, healthy, orderly, destructive pullback at the 21, it's like, what are you doing, right? What are you doing? So the thing here is, over time, by the time we reach this point where you're worried about that pullback, you've made your money. And you've made a lot of it. That's the thing. When the market, you're playing the ebbs and flows of the market, you're waiting for the pullback to the 21. Then you're getting a bit more aggressive for the push into 2 to 3 ATR. So I'm just going to take some easy numbers here, right? Let's say on the high probability easy push, when you were doing your job, when you should have done your job, let's say on that push you made $10,000. Well, then guess what? When we get to this point where we're a bit extended on the weekly and you're worried about the pullback, scale down in position size. Maybe you put yourself in a position where no matter what happens, you might not be able to lose more than say $2,000. Put yourself in a position where keep going long, keep getting long the best looking setups the market has to offer, but just scale down in position size. And the beauty of that is, guess what? If the market just keeps going and keeps going and keeps going, you're making money for that 1, 2, 3 month push. Maybe you're not making as much as you would back here because you scale down in position size, but you keep on printing money if the market keeps pushing. And then if we do pull back because you scale down, you're going to put a tiny little dent in that over there. Fear of a pullback, that's a psychological thing. And a lot of times that's just a result of our experiences. For a lot of newer traders, you're going to mentally have a very negative, view, or a very negative, what's the right word I'm looking for here? Help me out, gang. You're just going to be predispositioned to fear a pullback. A lot of newer traders, they just keep going heavy. They keep getting long. They keep forcing the issue. They put themselves in a position where as soon as the market does the inevitable and pulls back, that it wipes them out. So yeah, you know what? If we're the traders who keep getting heavy and keep risking our whole account and just keep going aggressive and we give it back every single time the market pulls back, then yeah, guess what? I'm right there with you. I'm probably going to be a little bit sketched out and fearful when the market is extended because it's like, shit, I've done this before. I know any week now I could give it all back. It's an easy fix. Just scale down in position size and keep trading the setup in front of you. Right now, the setup in front of us is a bullish daily squeeze in the SPY, in the Qs, in the Dow. So hopefully that makes sense. But the biggest piece of that there is when you get the pullback in the market, you're looking to get aggressive down here. Secure the bag on that push to ATR. And now you're having fun up here. You did your job, you put your money aside, and now you're keeping things small. And if the market wants to get extended for another 2, 3, 4, 5, 6 weeks, you'll just keep on adding to that pile. Slowly adding to that pile. So hopefully that gives y'all a few things to think about as far as, should we be worried about a pullback here? My opinion is no. And over time, it gets so much easier not to worry about a pullback, once you got that experience under your belt. Then it's a bit of a different game. Yeah, Steve, you're not wrong about Tractor Supply. Terrible spreads. No, I didn't really look at the calls, so I'm not too sure how bad it would be for just some long in the money calls. But in terms of doing a put credit spread, it made me think of Shopify a little bit. Hey, my man Gilly, my brother. What's up, Gil? I hope you, your wife, your children are good, man. Gilly, LRCX, my man, pretty much anything in the semiconductors right now, I'm going to be a fan of. And Little Lamb here is no exception. Beautiful daily squeeze, like super bullish. Beautiful 3-day squeeze. And there's your weekly. And it's in, I think, the right sector. The sector has the same structure. So it's one of those things where if this weekly squeeze fires long, say into September, October, whatever the case may be, the semis are pushing towards 280, 290 here. Everything's probably going with it. Qualcomm's probably going higher. AMD, NVIDIA, AMAT, LRCX. I pretty much like the whole group right now. TSM, TXN. Probably all of them except Micron. Because nobody seems to love Micron. Actually, you know what? No, even that thing. Even Micron is getting some love here. Even Micron. Let's trade. What do you got? TER? There be that daily. There's the 3-day. There's the weekly. I mean, here's what I love about these kinds of setups. And I'm just going to use Goldman again as kind of the poster child here. But Teradyne looks great. But what I love about, you know, you find a stock that's in an uptrend, it's squeezing on a weekly chart and literally has a squeeze all the way down to the 5-minute. That thing's ready to make a move. Like it's just kind of that simple. You're squeezing from a weekly chart and then every other time frame down to a 5-minute. There's a pretty good probability we got a nice move coming around the corner. Then you bring in the context of, well, are we in an uptrend? Are we in a downtrend? In terms of trying to gauge, well, which way are we going to pop off here? Are we in an uptrend or are we in a downtrend? Is our histogram negative? Is our histogram positive? Do we have stacked EMAs? How's the weekly chart? And then what about the group it belongs to? What would have been a real bummer here is if you're looking at that Goldman setup, but imagine Goldman just so happened to be a transportation stock. Now, I still might trade Goldman, but it's not as sweet of an opportunity. Goldman was a killer setup all on its own, but you're adding a little bit of extra spice here, a little bit of paprika, because the financials themselves just teeing up from a 5-minute all the way up to a weekly. Powerful stuff. Powerful stuff. Yeah. MU is the kid that doesn't get invited to the parties. Don't ask me what I know about that, though. Thoughts on Netflix? Netflix has been a toughie for me. I mean, really, the only thing I can think here on Netflix would be to do an Iron Condor. Now, here's the thing. At some point, something is gonna give, and I would argue it's probably going to kickstart, a pretty nice trend, whether that be to the upside or the downside. Reason being is, what's today's date? The 9th. For conversation's sake, we're going to say that Netflix has been squeezing on the weekly chart for the last 365 days. That's a long-ass weekly squeeze. So the tough thing here is, when does a directional move happen? Now, I think for those of us that are, a student of the squeeze, there's no argument here. At some point in the future, Netflix is, probably going to explode and rally into, 3 ATR 600, or it's going to roll over down towards 450, 425. I think a pretty significant move is going to come out of this weekly squeeze. However, it's been a toughie to time here. It's been a tough one to time. So, as long as that weekly chart has a neutral histogram, I would actually look to do Iron Condors here. Not the sexiest trades, but if I could sell call spreads at 570 and sell put spreads at 480, something like that. And I think it's one of those things you just got to be patient with it here. Yeah, it's a long weekly squeeze. There's a 3-day. It's just been a tough one because, over the last year, everything's been there for Netflix, right? You've had these moments in time where it's like, beautiful daily squeeze, everything is bullish. So not only have you had a crazy bullish market over the last year, Netflix has also been poised, a handful of times to finally make the move. It's just been a tough one. Really been a tough one. Someday, though, I think you get something out of that bad boy. Rich. That's how it goes. I hate to say it, but Rich probably isn't kidding. If we all jump in here today and throw on Condors, all of a sudden it's like, boom, JP Morgan upgrades Netflix to $900 a share. That is how it goes sometimes. That's funny. Fabian, what do I think of PayPal? The weekly chart is really intriguing. Um, just because you got a nice uptrend here, um, and my mindset is as long as this uptrend is one intact and two going to continue. Well, if we study the uptrend here, we dip to the 21, we hold. Like that's the end of the funny business, and then off we go, and we dip to the 21 and we hold. Then there's your next leg higher, and we dip to the 21, we hold, we push, we hold, we push, we hold. Party's going to continue here. And by that, I don't mean we're back at all-time highs this Friday. I just mean if over the next 4 to 8 weeks, this really clean, really orderly uptrend just resumes itself, that should be your bottom there. Now, take that with a grain of salt, right? We could dip to 265 and then bounce, and everything is good here. But just in terms of 40,000-foot view of the trend, that was a good dip buy. That was a good dip buy. That was a good dip buy. That was a good one. And nothing looks wrong with the weekly. Stacked EMAs. So, and the daily is what's tough here. The daily's what's a little bit tough, right? Because you got your nasty histogram here. So, I mean, you're potentially fighting a daily squeeze is the way you got to look at it. So no stacked EMAs, red 10x bars, histograms negative. Maybe that bounce to the 21 just kind of gets rejected here. So it's a daily squeeze versus a weekly chart. I would tend to put the focus here. So that's kind of how I would look at it, really. Where's that recent low? 270, call it. With patience and potentially a couple more tests of it, based on the weekly chart, I would look for 270 to be the bottom. And then with all the time in the world, looking for that trend to continue there. But that's where I think you want to be patient. And that's where I think you want to give the swing trade plenty of time. Because we're not looking at the kind of daily chart that gives me the impression, within the next 4 to 5 days here, we're going to make a nice push higher. It looks like it over here. Not the same daily chart here, though. So it would be something I would be really patient and probably scale into. So say I want to risk $5,000 all said and done on a PayPal swing trade. I'm probably inclined to, maybe risk $2,500 here. And then if we get back above the daily 21, we get our stacked EMAs back. The histogram, turns the corner. Once we get our structure back, then maybe I add the other $2,500 of exposure. Just because, again, your daily chart is fighting your weekly here. The beauty of that Goldman trade was everything was on the same page. 5-minute, weekly, daily, 3-day. It's like, hey, we're all on the same page here. Getting ready to fire long. Where with PayPal, your daily and your weekly just might be sending conflicting messages, so to say. Patience. Just be patient. All right, gang, let's do a few more here, then I'll cut you loose before the open. Apple, I'm a big fan of. So obviously the Qs here, they're going to drive the bus for Apple. If the QQQ can fire this daily squeeze long, and we get a good week, 2 weeks of momentum, beautiful setup on Apple. I think Apple's poised to run right along with it there. ACN looks bullish. Personally, I would wait for a pullback because the move that I'm looking to catch is the move from the 21 EMA pretty much into about 2 ATR. So for me, it's like, I look at this, it would be the same as me thinking about getting long Goldman today. It's like, well, the party I'm looking to attend already happened here. Now, if we can get a pullback, then I would take it. I would be thinking the same thing here for ACN. Now, if I got long back here or something, different story. And then PD, I like that. Good looking daily squeeze. good looking weekly, and a 3-day. Awesome stuff. I like that a lot. I like PD. TIGR here. So just probably something I wouldn't trade, especially to the upside, especially if I want to get long. If I want to get long, I need the weekly chart to still have that structure. And all I mean by that is really, I want the weekly chart above the 21 EMA. Ideally, that 21 EMA is pointing to the upside. You got all the wind in the world at your back when you have that weekly structure intact. This is just a little bit too choppy here. So I'd probably avoid that one. And Eric, we'll finish off here with AXP. I like it. Daily squeeze, 3-day squeeze. That looks pretty bullish, and a great looking week. No weekly here for American Express, but you do have the combo here with the 3-day and the daily. And I'm sure you got a whole bunch more here. Yeah, you got a 4-hour. Good stuff. But all right, gang, good stuff today. Good prep session. Good prep. So, yeah, be patient. Sit on those hands early into the week. And let's see what the market has in store. As far as the wee hours of today's session, let's hunt down a squeeze here real quick on the SPY futures. We got to have something here. We got to have something. Yeah, we'll take it. You got a 15-minute squeeze. So maybe that 15-minute squeeze fires long or short and gets a party going here this morning. But there you have it. Awesome stuff, y'all. I appreciate your time as always, and I will see you again Wednesday morning, same time, same channel, for another round of prep. So everyone behave this week. Be patient, be smart, get a little bit better, and I'll talk to you all on Wednesday morning. Peace out.